Yeah.
All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. How's everybody doing today? Welcome in. Guys, we have a very important week, like I've been talking about in all of my videos this week. Bitcoin is at a major decision point, and throughout the week, we've had some interesting developments happen. Now, I know the thumbnail is very bearish and very scary, but we are not quite in super danger yet, but we are at the beginning stages of this, and we could get a much bigger dump to the downside if we do confirm some bearish price action on the charts, which it looks like today could be confirming that day. And I will go into that in just a second here. Okay. So let's zoom out to the daily chart here. And first of all, I want to talk about what we've been seeing overall here with Bitcoin. And this range is a range that we've been in since like late November, since Trump won the election. We have been in this bigger range, ranging between 93K, or really 88K is the value area low, this range 87, 86, and 105K, 105 to 106K. And Bitcoin did see a nice bounce from our pitchfork midline. We were able to reclaim the pitchfork lower band, we were able to reclaim the midline, pump up to the upper band, where I was expecting a bit of a rejection from this upper band. And I've been talking about this for weeks on my videos. We were also seeing a breakout above the all-time high to a new all-time high. So our first sign of some bearish price action was a failed breakout of the all-time high, where we come up to the all-time high, we wick past it a little bit, and then we start to close candles back below it. Well, you can see here on our daily chart, we pushed one candle above. The very next day, we had a big bearish engulfing candle where we engulfed pretty much the 2 days prior, dipping below our all-time high. Then bearish, coming back up for a bearish backtest of not only the pitchfork band, but the all-time high, and rejecting, and now we are making new lows on the chart. Also, if we look at our technical indicators on the chart, our momentum oscillators, we have a triple drive of bearish div. Higher high, higher high, higher high here, lower high, lower high, lower high here. Now, during this first drive of bear div, money flow still looked really, really healthy and really good. So we were expecting, and we also got the hidden bull div print on NAMI. So we were expecting one more high to come in, confirming another drive of bear div. Hopefully by then we would see money flow topped out and starting to come to the downside, which would kind of confirm those daily bear divs might start playing out. And so far, we are seeing a possibility of these daily bear divs playing out, and they could play out to go much lower. Now, our second major sign, our second major warning sign on the charts was the fact that we had this range. This has been the fair value for Bitcoin. This is what the market has priced in. The overall market has priced in the fair value for Bitcoin the entire year of 2025. And of course, when you reclaim the value area low, what's considered the undervalued part of the range, or the asset's fair value, we can pump up to the point of control. The point of control is what the market considers fair value for the asset. And then if we break the point of control, we can go to the overvalued part of, so when Bitcoin gets up to the value area high, the market generally considers Bitcoin overvalued. And this is where we could see a bit of a sell-off around the value area high. If we were talking about a couple different scenarios here. If Bitcoin was going to break out, backtest that all-time value area high, and hold it as support, we could continue up to new levels of price discovery, and maybe even continue to price in a new fair value at a higher range, start a new range at a higher price levels of price discovery, and the market would be considering Bitcoin to be more valuable the rest of the year than it's been for the entire year of 2025 so far. Well, the other scenario was a little bit more of a bearish scenario, where we do see a failed auction type of price action, where we get an attempted breakout of the all-time high and of the value area high, but we do not see buyers stepping into the market considering this as support now, where we're going to make new levels of price discovery, and that the market is still considering the fair value for Bitcoin within this bigger range here. And that if we do start to dump back within our fair value, we could see a flush all the way down to the point of control, which is at 96.5, 96.5, 96.6K, 96.8 in that area. And this area here is going to be a very, very important support area, because for the full year of 2025, the big players in the market have considered the fair value for Bitcoin at about 96.8K. Now, if we start to see a failed auction of the all-time high and break back within our volume profile, there is a high likelihood that even if we come up for a bearish backtest of that value area high and reject, that we could work our way down to 97K, 96.8K, where then if the big players in the market are still bullish on Bitcoin, they will say, we're willing to buy at fair value. We're willing to buy at 97K because we no longer think this is fair value. We think this is undervalued now, and we are going to push the price, continue to push the price of Bitcoin up to much higher levels. And so if we are, which we are now seeing, daily candle closes, this is important here. After breaking above the value area high, you want to sustain above that value area high. You want to come down to that value area high, backtest it as support, and continue to work your way higher. But because we are now seeing daily candle closes, yesterday was a candle close back within the range, and today the candle closed and opened within the range. Now we have a few hours until the candle closes for today, but it doesn't look like we're going to get back above 106.5 before the end of the day, or 106.3 before the end of the day. And if Bitcoin does close this daily candle back within this range, we could be confirming that the market is now finding reacceptance back within this range. We are going to, and there's a possibility we're at a local support level now. There is a possibility that we do rise over the next couple days, maybe over the weekend, to bearishly backtest 106K. And if we reject that, there is a possibility of flushing down to 97K, where the market's fair value for the asset has been for the whole year of 2025. Now, once again, if the market is still remaining overall bullish on Bitcoin, fundamentally overall at 97, we expect major buyers to come in to push the price of Bitcoin back up, maybe break out to new all-time highs, and maybe even break out up to 135K up here at the top of the pitchfork. But if the market is still in turmoil here and the market is considering, you know what, we're not willing to buy at fair value, we want to wait until it gets to the undervalued portion of the asset, we're going to lose that point of control, probably back test that point of control, which is also our pitchfork midline, and we're going to dump. And by the time that'll take some time to happen, by the time we get down there, that lower pitchfork band is going to be in confluence with our value area low. Also, if we do a golden pocket pull, if we just look at this entire impulse up we've seen from 74K up to our new all-time highs, and we turn on our golden pocket, and let me go on to the Coinbase chart, because the Coinbase chart is a bit better as far as that range goes. So let me turn on the macro range here. And if we pull this volume profile all the way, you can see that our golden pocket is coming in right at the value area low of our range. Now, after we see this push up from 74K up to 112K has been a very explosive push to the upside. Actually, in some ways, a very unhealthy push to the upside, because we have not had any major liquidity grabs for market makers to stop out retail before continuing the push up. So in some ways, this wasn't healthy, but it was explosive. Now, we could be at the end of this impulse, and we are starting to change market structure bearishly with high time frame bear divs. What that tells me is that this impulse could be completed, and now we are about to see a bigger correction to the downside. So after an impulse completes, you're generally looking for some sort of correction to the downside, most commonly is an ABC pattern. And you could see a push down to 97K, where we would bounce from that point of control, maybe only to come up to the value area high, reject the value area high, and then a push down to the value area low, which is also our golden pocket. Now, with any impulse, after you see a 5-wave impulse up, you generally see a 3-wave corrective move down, and that corrective move, the most common target for that corrective move is the golden pocket between the lows of the impulse and the highs of the impulse. And that golden pocket is coming in between 88.7 and 87.5, roughly. And we're not going there yet. We play level to level as traders. So first, 96.8, 97K is going to be a major level of support where Bitcoin could bounce from there. But I would like to say we have some caution and warning signs on the charts here, with us starting to close daily candles back with inside our volume profile with high time frame bear divs on the chart. Bear divs on the chart on both NAMI and Market Cipher B. We are confirming bear divs on the chart. Now, if we do also let's go to the index chart here, and let me zoom out onto the weekly time frame. This is our weekly time frame, and this is our entire bull market that we've seen since 2022, since the lows at 2022. And one thing that I do want to point out here, anytime you see multiple tribes of bear div with your money flow leaving out of the asset overall, that is a very bearish sign that we could see a bigger dump to the downside. Now, look at this pitchfork that I have pulled here. Now, this pitchfork is a very important pitchfork pulled from the COVID 2020 crash lows up to our 65K all-time high, down to our bear market lows in 2022. And you can see how well in this entire bull market that this pitchfork has been respected. You know, we found our bottom, came up to the top of the bottom of the lower pitchfork band, rejected, but made a lower high. Was able to come up to the top of the band, rejected, held another lower high, rejected again, held, grabbed the lows, just grabbed the liquidity of the lows, was able to push, finally break above that band that held as resistance a couple times. And then we were able to flip that band to support to push up to our midline. Our midline for a few weeks here acted as resistance. It was also the 1.618 of that fib channel that I've shown you guys many times. We did reject from that area, and we pretty much grinded down, not completely touching the band, but into the band area, held it as support, pushed up above the midline, finally breaking the midline that was acting as resistance prior, trying to flip it to support. We actually did bounce from it, and we did make a new high. Now, that high was barely a new high. It was just a swing failure pattern, but we grabbed the liquidity above the highs, and then we lost. If we look in here, let me actually make this chart a little bit bigger and a little bit cleaner for you guys so we can see this. We did try to hold in this area here on the weekly for 2 weeks. We tried to hold that midline, and once we finally lost that midline, we saw that big giant dump to the downside. We continued to dump down to our pitchfork band of support of a different pitchfork, hitting into that pitchfork band of support perfect, and then seeing the big push up. Now we have pushed up to the midline again. Let's zoom in on the daily chart. On this same pitchfork, you can see right around the value area high a couple weekends ago, we found initial resistance at the pitchfork midline. We were able to kind of just chop sideways, range sideways, break above not only the value area high of the range, but the pitchfork midline. We back tested that pitchfork midline, tried to hold it as support, but overall made a lower high at the all-time high, made a lower high at our all-time high, confirming a rejection of, instead of breaking out to new levels of price discovery, confirming a rejection of the all-time high. And now we are breaking down below our pitchfork midline. And if we do see, we could see a lot of continuation of this breakdown, at least to come down to take out our range lows down here that we have at 100.7. These range lows are going to be really important for us. If we can just come down, grab the liquidity of those lows, there's a possibility we could push right back up. Let me go ahead and come onto this chart. I am going to zoom in now onto the 2-hour chart. And let's look at, let me just pull this up here. So this is a different, smaller pitchfork pulled from the beginning of the wave 4 weekly impulse. But you can see we also, tried to get above the band, lost the band, had an immediate low time frame backtest, rejected, made a new low. Made another lower high, another lower low, changing market structure bearishly. We had our 3-wave zigzag correction to the upside and an ABC correction after seeing a potential 5-wave impulse down. ABC correction to the upside. You can see in that ABC, we rejected many times from our pitchfork band that we had lost. And now we are dumping down. And in my last week's videos, all the videos this week that I've made, I have been talking about this pitchfork midline being a very, very important support level, not only with it being the golden pocket of our prior range lows to our new all-time high. You can see that that golden pocket was coming in right on that pitchfork band of support, or pitchfork midline of support, where we really needed to see a bounce here. It did hold as support many, many times. 1, 2, 3, 4, and earlier yesterday we did get a scalp long off that, held here, held last night. Now today we are breaking it to the downside with a volume imbalance candle to the downside, and we are currently in the process of back testing this band to see whether it's going to reject us and we're going to continue to drop, or if we can reclaim it, we're back in business and maybe we can work our way up to higher levels. So Bitcoin is literally at a major decision point. We are going into the weekend. We are actually in the weekend now as far as the markets are closed. And Bitcoin in the weekends does tend to range, but I do just want to warn, our money flow looks bearish here. Our money flow overall looks bearish, and we could look at this push down. Yesterday's video, I was showing you guys a descending channel, not that one. I will just throw that on the chart here. A descending channel where the bottom of the channel was near our pitchfork midline and our golden pocket support, where we could have seen a deviation below the channel into that support, bounced, and what we needed to see after, because we were below the value area high. If this was going to hold, we needed to see a bounce and a reclaim of value area high to continue to push up. Well, what happened? You can see here. Let me just actually grab this volume profile and extend it. You can see what happened here. We lost the bounce from the midline, came back up and rejected the bearish backtest of our value area high, confirming that maybe the market wants to drop back inside our volume profile. And so far we are dropping, continuing to drop and continuing to print a daily candle back within our bigger 6-month range, the 2025 range that we have seen. And so it's a little bit bearish that Bitcoin not only is losing this descending channel, but we are also falling back within our macro value area high and closing daily candles. We haven't closed today's candle. We still have 3 hours left, but it is not looking very good here as far as momentum to the downside looks to be increasing, not decreasing, and our support levels that we really wanted to see hold are starting to break now. Okay, so let's go ahead and look at this correction that we've seen so far. So what we could look at here, let me just zoom out onto the 4-hour chart. This does look so far pretty corrective. If we turn on our volume here, there is some concerning things that we are seeing today with today's dump. So if this is just going to be an ABC correction, and in an ABC correction, you're looking for a 5-wave move down here, followed by a 3-wave move up here, followed by a 5-wave move down here in an ABC. So it's a 5-3-5. That's what we call it in the Elliott space. And the target for that Elliott wave correction is around this support level where we're at now. We can actually measure that target by taking our trend-based Fibonacci extinction, going from the highs of A to the lows of A to the highs of B, and your target is between the 1-to-1 and the 1.236. Well, we are in that target. So, and we are at general support here. This has to hold. If this is just going to be an ABC correction, and then we're going to blast off again. Now, there is the potential, especially with the bearish money flow that we are seeing on the charts and the bearish high time frame divs also falling back within our volume profile, there is a potential that this is the start of a bigger ABC correction down to 88K that I just explained earlier, where this could be a 5-wave impulse down. So what we would be looking at is a bigger ABC correction where we're going to look for the A wave to come all the way down to 97K. The B wave could come up to your golden pocket, which would be around the value area high, around the midline. And then your C wave could drop all the way to your golden pocket down here and value area low. Within this A wave, we are looking for a 5-wave impulse. It's a subcount within the A wave. So monitoring the drop that we've seen so far from the all-time high. If this was just going to be an ABC and we're going to push back up, fair enough. It could be, and we could be done now, and we could be about to push back up. But if this is an impulse down and the start of a much bigger correction, then we want to see a 5-wave impulse come in here. This being a 1-wave, not an A. This retracement being a B, or a 2, excuse me. And then this would be a 3 all the way down, maybe a 4, 5, coming down to, 97K. For your A wave, and then you would see a 3-wave corrective move for B, and then another extreme impulse for C down to 88K, potentially 88K. And so there is a possibility that this is the start of an impulse. And why do I say that? Because in your push down that we've seen in the last couple of days, especially today, volume is increasing quite a bit on this push down. We are seeing volume increase relative to the volume around it. And what that does tell me is that oftentimes in 3 waves down, you do get explosive volume filled moves that tend to continue to push down. Our money flow looks pretty bad right now on the 4-hour. If we look on the 2-hour chart, money flow is coming out again, looks pretty bad. If we go onto the daily chart, not the daily chart, where was that? The hourly chart here. We are printing some hidden bear divs as well. Let me see what time frame that was. I believe, was that the 4-hour? Yeah, we are printing hidden bear div signals on the 4-hour on NAMI and coming up into that little high here, hidden bear divs, and now we are continuing to drop here. And a hidden bear div is a continuation signal. So we are seeing multiple signs of bearish confirmations that this might not be an ABC. This might be a 1, 2, 3, 4, 5, all the way down to 97K, where then we could see a 3-wave corrective move. So let's just do a thought experiment here. Let's just assume that this is going to be a 5-wave impulse down to 97 to our point of control. Okay, so what we can look at, let's do a golden pocket pull from the all-time high down to our point of control. and look at where our golden pocket would be coming in, because if you're going to see an ABC correction, your most common target for the B wave to end is a golden pocket for a lower high, for a more macro change in bearish market structure. So if we are going to see a dump down to 97K and a nice bounce from 97K, the market might be saying, okay, we're willing to buy down here. We're going to buy down here, but we're only willing to buy as a short-term play. And as we push up in our three-wave corrective move up to the most common retracement for a lower high, it is also the value area high of the range, which would be the higher time frame bearish backtest of that value area high in confluence with the support that's been holding us many times now. Because we would be losing it, it would be flipping to resistance, and it would be acting as resistance also in confluence with the golden pocket. So 106K, if we dump down to 97K, you could look for a nice good long to at least bring up to 106K. Once we get up here, if we are seeing continued bearish signals on the chart, we might be looking for a bigger dump down. Now, we are still very far away from this, and this is just a thought experiment right now. We are still not clear whether this is just a corrective move and we're going to blast, or if this is going to be part of a much bigger impulse to the downside to 97K. I am leaning, I have to say, with our daily chart closing daily candles back with inside our volume profile after seeing a failed auction of the all-time high with bear divs on the chart. I do have to lean towards this could be the start of a bigger correction down. And I am just going by the technicals here. Just by the technicals, this does look like we could see a bigger correction down. Now, if we look on this daily chart here, this is the Coinbase chart with our Coinbase pitchfork that is pulled from the bottom of wave 4 here. The very first impulse out of that wave 4 weekly correction, our 2024 range. This was our 2024 range that was about 8 months long as well. And if we look at this pitchfork here, we are holding the midline very well here. You can see on our daily time frame, let me clean up this chart. On the daily time frame, we have had many tests of this midline after getting above it, and it has been holding as support. Now, this is the first time that we have seen a pretty big wick past that midline, but our daily candle, if it closed right now at this level, would not be a break of this midline. So until we start closing daily candles below this midline, we could say Bitcoin is still looking okay. It is still maybe just going to be a correction, and maybe we are going to hold this support and push up. We don't have, we have some bull divs on the chart, you know, on lower time frames. We actually had some bull divs, but they've now been invalidated. And there's a possibility we could continue a little bit higher here to reject from our VWAP and then start to dump and continue to make new lows. Now, if we do reject from this midline on a bearish backtest, I am looking to come down really to take our liquidity that was never taken of our prior range lows. This was our prior range that we had before we saw one more big push to the upside. So let's go ahead and we're going to take a volume profile and we are going to look at, let me just grab that volume profile there. And we are going to look at from our prior range all the way, now that we are dumping back within this range, we pretty much dumped to the point of control of this range. On Bybit, we have hit the point of control of that range. If we just take that same volume profile, you can see we're bouncing from the point of control of this range. We are seeing more local market structure bearishly, you know, making lower lows, lower highs, lower lows, lower highs, lower lows. So market structure on lower time frames is bearish. We are not seeing really the bull divs we would want to see. If we were really going to bounce from here and start to break up again, we would want to see some bull divs coming in on the charts. We are not really seeing those bull divs come in on the charts that we want to see. 1 hour chart, let's go to the 4 hour chart. 4 hour chart, no bull divs. Money flow is starting to aggressively leave the asset. 4 hour chart, hidden bear div just printed, you know, less than a day ago. Now on NAMI, there is some potential bull divs. You can see higher lows here, lower lows here. But it just overall, it does look a little bit more bearish, like we might continue to drop down. Now, if we are going to drop down in a 5-wave impulse rather than a 3-wave corrective move, then where do we want to see a bounce from, at least for our wave 3 to end? So we could go from the highs of 1 to the lows of 1 to the highs of 2. We're going to turn on our 1.618 and look at where our 1.618 is coming in. Now, that is often a common target to stop your third wave. So if this is going to be a 5-wave impulse down in an A wave, remember, in the bigger A wave, then our third wave could come down to the value area low of this range, wick just a little bit past it to hit the 1.618. Then we could bounce, and our bounce, I'll tell you where our wave 4 bounce would be if we came down there. And then you're going to see a 5th wave, and that 5th wave could potentially come all the way down to your point of control. And let's go ahead and pull a theoretical fib. Now, this is completely theoretical right now, but if our third wave is going to end at the 1.618 and the value area low, then let's pull a fib from the highs of wave 3 to the lows of wave 3. And I'm just going to put it right on that 1.618. Are between the 0.382 and the 0.5 is where we would expect to get rejected in this wave 4. So look at where, let me go ahead and hide this smaller range now. Look at where our 0.5 is. It's at the macro value area high that we are losing today. We are breaking back within our macro volume profile. So if we are going to continue to grind down maybe over the weekend, hit this 1.618, see a small bounce, we can look at 106.4. If we reject from the bearish backtest of our value area high, which would also be our 0.5 wave 4 target, dump down to 97K. Now, this wave 5 doesn't have to end at 97K. Actually, there's a good possibility that it only goes to take the liquidity of the range lows that we have never taken yet. This liquidity that is resting down here, we have a lot of liquidity. This could be the end of our wave 5, and then we could see that 3-wave corrective move up, and we would have to adjust our golden pocket based off where that ends. But this is an area, this is a possibility we could see. If we go on to our liquidation heat map, let's go on to our Model 3 heat map. You can see, let's go zoom out to the past 2 weeks of price action. We do have a lot, and let me go on to Bybit here. We do have a lot of liquidity that is resting below 100K. Let me find that liquidity here. Yes, right below 100K, you can see the majority of the liquidity now is below us, not above us, and the majority of the liquidity is resting right below our range lows at 100.7 to 100.6. So dipping down and seeing what we call a swing failure pattern. Now, a swing failure pattern is when you have an important low or an important high, and you try to break out above that level or below that level, and you see a wick piercing the level, and then an instant buyback and reclaim of that level. That is called the swing failure pattern. You're attempting to break the swing level, in this case to the downside. You would see a failed swing break of bearish price action. You would reclaim that level, and then you would pump. The market makers are tricking people to go short right at the bottom. Everyone says, oh, it's a breakout trade. We're breaking the range to the downside. I'm going to short the range to the downside. And they trick those people to short the bottom, giving fuel, trapping short positions right at the bottom, which gives fuel to push the price to the upside. So that is something that we absolutely could see, and I will be looking to take a long down here if and only if we have the confirmed swing failure pattern. So the wick beyond the level and the reclaim of the level. The second you reclaim that level, let's actually throw that back on there. The second you reclaim that level, you can look to long the reclaim with your stop below wherever that wick ended, and you can bring it up. In this case, I would only be looking to bring it up to the back test of the value area high. Now, that could be a good TP1. That's still a 10-to-1 risk-reward ratio, or depending on how long that wick is, you might have to adjust that. But that's a good trade, even if we're going to make a lower high and then continue dumping. Or if it's the end and you're going to come to the value area high of the range again, let's pull that range again. if you're going to come to the value area high of the range, that's still a great trade. This is how, as traders, we don't know which way the price is going to go. We just work on scraping a little bit of money from the markets, and we look at our levels, and if we have confirmation at our levels, we take the trade. If we don't have confirmation, we don't take the trade. As a trader, all we're trying to do is find the key levels of confluence in the market and trade whichever comes. I got a comment on my YouTube video yesterday, and the person said, you know, something to the terms of TLDR, it could go up or down. Tomorrow I'm going to come on the charts and say, I told you so. Well, yes, of course I don't know. Nobody knows truly whether it's going to go up or down. As a trader, what we're doing is we're mapping out both the bullish scenario and the bearish scenario. We're mapping out what we want to see for confirmations to enter trades at those levels, not in the middle of nowhere, at those levels. And if it drops and we get a bullish setup with confirmation, we long. If it pumps and we get a bearish setup with confirmation, we short. So it's not about predicting the price and what's going to happen. It's about setting up, planning your trade setups ahead of time at key levels of confluence in the market of support and resistance, and taking whichever one comes, scraping a little bit of money away from the market makers every day and building your account. That is what a true trader does. And you also have to make sure you're using proper risk management, using stop losses, having at least a 2.5 to 1 risk to reward ratio or higher. All that stuff is part of being a good trader. So I would say that Bitcoin is in some danger. We could see that bigger drop to the downside. We are seeing some bearish confirmations on the charts. So far, I'm not highly concerned yet, but if we do start to close daily candles back within our volume profile, it is a big warning signal. Warning signal 1, triple drive of bear divs, money flow leaving the asset. Even if we zoom on to the 12-hour, you will see that money flow has been leaving the asset on Market Cipher B. Money flow draining out of the asset here. Okay, so bearish signs. And the last time we saw these bearish signs, let me show you this. I showed this to the guys in the Discord yesterday. Let me hide this range and let me just clean up this chart just a bit here. When we were at this range area here and we were seeing very similar choppiness price actions, starting to see that exhaustion in the buying, we were seeing those bear divs come in on the chart, and money flow was draining out of the asset. As the range was forming, money flow was draining out, and I made a video before this saying that this is going to be distribution based off of what we were seeing on our indicators, and it happened. And so we are seeing a very similar thing here right now with Bitcoin. As we're grinding up, of course, we're on lower time frames because it's not as long as this. So instead of on the daily, we're jumping onto the 12-hour. And as we're grinding up here, forming multiple drives of bear divs, money flow leaving the asset, we could see something very similar where we do decide to break down. The biggest thing that I have seen that is giving me concerns is when you have a very important high, especially the all-time high, and you attempt to break out of that all-time high, and you attempt to find new levels of price discovery for the asset, but the very next day you have a bearish engulfing candle where you fall back, not only take the gains from the day before, completely erasing those gains, but you fall back underneath that all-time high, and then eventually underneath the value area high. Those are very concerning signals that this was a failed auction, that we tried, the market tried to have the auction price for Bitcoin being at higher levels and new levels of price discovery. It failed in that attempt, and now Bitcoin is going to rotate back down to the fair value of the asset that it's been for the whole year of 2025, which is at 97K, 96.5 to 97K. So yes, guys, Bitcoin concerns in paradise here. Let's see. Yeah, and I guess that's now yesterday in my video, I did cover on this CVD and open interest chart. Let me get rid of some of this stuff here. On the CVD and open interest chart, one of the things that I was really happy about seeing, and if you're a bull, happy about seeing, and was a signal that maybe that we are going to bounce from that pitchfork midline here and the golden pocket at 105K. Let me zoom in here. At this level of support that we were looking at, why could we bounce here and then this just be an ABC, ending our C wave target at that 1-to-1 and then see the push up? We were basing that based off of what we call bullish or bearish absorption. And so bullish or bearish absorption on the charts is when you're seeing the price action, and I'm going to go from the 100.7K range lows, those range lows that I was just describing to you, making higher highs in the price action. Your CVD is making lower lows. Now, what is CVD? Cumulative volume delta. Cumulative volume delta is just aggressive market participants. So the participants that trade daily, that market in and out of their trades, that are active traders. And active traders do move the market the most. And as we're seeing the Bitcoin price making higher lows and maintaining strength overall, a bullish trend overall, we have seen market participants trying to short Bitcoin over and over and over since our last range lows, and Bitcoin is not dropping lower. It's making higher lows, which is a bullish sign. That's called bullish CVD divergence. Now, if you see your open interest from that key low in this area overall rising as this bullish CVD divergence goes, that is called bullish CVD absorption. And absorption is a much better, much stronger signal than even divergence is. And what absorption is you have big players in the market that every time we get pushed down and all these regular participants are shorting the market, you have a whale sitting there with big limit orders willing to buy up those sells that the market is selling, willing to buy up the sells that the market is selling. And so, but you can only buy up those sells if there's new positions that are opening. So our open interest, all open interest is the amount of positions opening or closing. So if open interest is rising, we know new positions are opening. We don't know if those new positions are short positions or long positions. I mean, we can know by looking at our CVD. If CVD is going down and the open interest is going up, we know those are new short positions. If CVD is going is going up and our open interest is going up, that means they're new long positions, right? So we know that overall in the market since what day was this? May 12th, for about 2 weeks now, we have seen a lot of new positions overall open in the market. Those positions have mostly been short positions, but we're not making lower lows. We're not breaking structure. So that is bullish absorption that we've been seeing on the charts, which is a very powerful, strong signal for continuation to the upside. So you're saying, well, Divine Hood, you've been bearish this whole video. Why are you saying that with this super signal that we're seeing on the charts? Well, yesterday, we really needed to see that bounce from that midline at 105K, but also you want to see in your open interest a general steady rise in open interest. Even this chop in here had me a little bit concerned, but overall it was more sideways rather than down. But now for the first time since our May 12th range lows down here, we are seeing the open interest significantly decrease and drop down. Now, I have been studying open interest and CVD divergences for a couple years now. And anytime I see an overall consistent push up in open interest and we're continuing to build bullish CVD absorption, but then we get a big flush down where your open interest drops significantly, that does tend to, over 60-70% of the time, invalidate the overall bullish CVD absorption. So I am highly, highly concerned that this bullish CVD absorption is about to get invalidated with the drop in open interest that we are seeing today. That is a pretty significant drop and continuing to drop as well. Now, we will have a technical invalidation of this bullish CVD absorption when we come down to that. Let's just grab a horizontal line and let's go here. So when we come down to this level here, we will see an invalidation of the bullish CVD. We're almost down there already. And if we do come down and hit that, you're no longer seeing a real rise in open interest. You're now seeing it being flat and kind of quirky. And that is a signal that that bullish CVD absorption is not going to play out like we would expect if it was a consistent rise in open interest. So very, very sad thing to see if you're a bull. This today, what we're seeing here. Okay, let me check the chat. I'm sorry, guys. I haven't checked the chat once today. Welcome in, everybody. How we looking? Well, I kind of just explained that. Like, not too good, to be honest, man. Not too good if you're a bull. What's up, R Pink? Thank you for joining, man. Jesus Save 77. I appreciate that comment, man. I appreciate that comment. Yeah, we are dumping. And yeah, if it goes into the 90s, so here's the thing. If it goes all the way, 97K is a major opportunity. 97K to 96.5K could be the major opportunity of the bull market. Like if the market is, okay, let's zoom out here again on the daily. If the market is overall going to remain bullish on Bitcoin and we're going to see a big super cycle, you know, the fundamentals of Bitcoin being adopted and all this stuff, what used to be considered fair value for the asset for all of 2025 will now be a major buying opportunity for the whales, for the big guys. So if we drop down here and Bitcoin in the market is still considering Bitcoin to be a supremely good asset, this will get bought up super quick and we will pump. But if we have turmoil in the markets and maybe they're not so sure, then we are going to lose that. And then the undervalued area would be an area where we could say, okay, this is the next great swing long opportunity for Bitcoin, where if we come down to the undervalued area, which has been considered undervalued for all of 2025, the market is still maybe considering this undervalued. Guess what? We're going to buy it up now because it's at undervalued price. And then if we lose 88K, unfortunately, you know what? We could come take our lows into 70K, into that golden pocket that we front ran that I've been talking about for months. We'll have to see. And you know what, guys? I showed this last week in the VC stream, but I hate to say it, but we could see something very, very similar to what we saw here, where we saw a top, a bit of a correction over 3 or 4 months, and then a double top, and then the bear market started. We are seeing triple drives of bear div on the weekly time frame. This could get pretty bad here if we see a double top. So not that. I'm not looking for that. I'm looking for this. So if we do see something similar to this, now let me shrink this up a bit. You get your correction just like we looked for. You get your impulse, one last impulse up here, take out the highs, double top, and then you see the drop. It looks pretty similar to what happened in 2021. And if this is going to be bearish, here's the thing, guys. On the news, we are hearing calls for $1 million, 300K, you know, even today in Jason's stream, 250K by the fourth quarter. These are just unrealistic expectations, you know, to happen so quick. Now, 250K could absolutely happen in this cycle, but I don't know if it's going to happen in 3 months. You know, we're already in June pretty much. So you would have to be, you know, pushing up way higher in 3 months. Is it possible? Yes. I'm not saying it's not possible, but is it probable? No. Okay. I thought I missed the stream again. Jaffiel, thank you for joining, man. I appreciate you so much. See you in 2027. Samuel, unfortunately, it could be the end of the bull market based off of the monthly bear divs that we are seeing and the weekly bear divs that we are seeing and the daily bear divs that we are seeing. This could be a double top, but I'm not going there yet. I am not going to go into bear market territory until we lose 74K. Now, if we do lose 74K and not just an SFP into the golden pocket, because remember, we have that nice golden pocket that is going to be right at the 70K area. If we turn on our golden pocket, it's going to be right below our lows that we made a couple months ago. So we could do something like a correction where we come all the way back down into this macro golden pocket, which is also the value area high of this 2024 range, and use that. What used to be considered fair value for all of 2024 is now going to be considered support in 2025, and then we're going to push up. So until we start to break back with inside this range, Jason actually just said this today in his stream as well, until we start to break back within the volume profile of this range, I am not expecting a true bear market to start. Do we see warning signs of it? Yes, absolutely. Weekly time frame. Multiple drives of bear div on the weekly time frame, money flow bear divs on the weekly time frame, money flow leaving the asset on the weekly time frame. On the monthly time frame, monthly bear divs on the chart here. And even if we look at, so this is the real scary part on Bitcoin. Since 2017, the highs of the first major bull market, second major bull market, you can see higher high, higher high. These are two different bull markets. Third bull market, higher high, lower high, lower high, lower high. Even with confirmed local monthly bear divs in this cycle, money flow, lower high here. Money flow is not looking the best. Same on NAMI. Bear divs here. Money flow starting to drain out on the monthly time frame. So if this is the end of the bear market, let's just address that question. If this is the end of the bear market, let's zoom out to the weekly chart. Now, I'm not saying it is, guys. Do not throw a bunch of hate on me because I'm just looking at the technicals, okay? We're just looking at the technicals here. But if this is the end of the bear market, then, and this was our big impulse, 1, 2, 3, 4, 5, an A, B flat where you take out the highs of A, and then C dumping down, and then maybe we see a small retrace and then continue to dump down. We could see the golden pocket pulled from the lows of the bull market, lows of the bear market to our all-time high. But because this is more than a 100% move and we are on log scale, 600% move, we have to take this Fibonacci, we have to come into our settings and we have to click based off log scale. So if this is the end of the bull market and we are going to see a multi-year bear market, something like this, then we could look for the absolute bottom where you sell your kidneys, you sell your house, you sell everything and buy Bitcoin at around 32 to 30K. Now, what else is at 32 to 30K? Historically, it is the most important support resistance flip on the chart. Support here, support in our summer long mini bear market, broke it to the downside, resistance now, resistance now, resistance now. So that is the ultimate level where you sell your kidneys and you go buy Bitcoin if we get down there. It is the most historic level support resistance flip on the charts. And if we get down there, it's going to be an incredible buy opportunity. I am not saying we are going there. I am not. I do not think we are going back into the 30s. Now, maybe into 51K. We have some, 51K is going to be an interesting level for me. We have a weekly level there. We have some very interesting fibs there. It could be an interesting level. But, okay, so that is addressing that question. Let's now, and I just think Bitcoin's too bullish overall. Okay, fingers crossed. What's your prediction over the weekend? My prediction over the weekend is a slow continuation of a grind down because I do think this could be a three-wave here, and we could continue to grind down to that 1.618, which is around the value area low of this range here, right around 102, 102.3. Money flow looks pretty bearish right now here. So, and we are not reclaiming the midline. Actually, let's go into this right now because I just finished streaming in the Discord and we were looking at this. We keep locally coming up to this midline that was acting as support multiple times. And now we are in the process of flipping it into resistance on lower time frames. Now, oftentimes when you have a major level like this is a dynamic level that changes with time. It gets higher with time. But if it's been holding 6 or 7 times, this is 5, this is 6, then we break it to the downside. Oftentimes you'll bounce from a local support. You'll see an immediate back test on lower time frames. Now, if you reject on lower time frames, you generally continue down to make new lows, maybe to come to a major level of support. You get the bounce from the major level of support, you'll have a higher time frame back test of that area. And then if the higher time frame back test rejects, then you're definitely going lower. So I'll be watching for that over the weekend and over next week. I don't think a lot is going to happen over the weekend. Sundays, though, at least where I'm at in the world in the United States, Sundays does tend to see, Sunday afternoons does tend to see some pushes. Okay, it's good. Weekend trap is in motion. Probable dump continuation next week, but also Chad Saylor will be buying. Yeah, he might be buying. You're right. How do I get into trading live? Right now, I am trading in Jason Casper's Discord. And I actually have a link to Jason Casper's Discord in my description. So if you use that link, click that link to sign up, you guys can get into the Discord and trade with me. But I might be making my own Discord in the next couple months here. I'm not sure. I got to talk to Jason about a few things, but it's a possibility. As a VP trader, split that VP into 2 VPs. Oh yeah, the volume profile. Yeah, I did have that as 2 volume profiles. So this volume, as a volume profile trader, yes, we are looking at this volume profile. This is actually 2 different ranges, but once you start re-entering back within your range, so you have this range from like last week, which goes to here, you know, you have this range, and then of course you had your impulse up. We had our 5-wave impulse up, and then we had an upper range up here where we could look at our upper range that is now starting to break down. So 2 volume profiles, but when you start breaking down back into your prior range, you can combine them and make one range. A very good example of that is on the daily time frame. We had our, what I was calling the all-time high range, which was this upper range here. And then we broke it down with distribution to the downside. And then we had a lower range here for about 6 weeks where we were pricing in the fair value for Bitcoin. So if you go back and watch my videos from back in March and April, you'll see that I was looking at these as 2 different ranges. And then once we started re-entering back within the volume profile of the upper range, it's like, okay, maybe this was considered a bit of a deviation. And now we can combine the 2 together to make a bigger range. And now we're looking at the bigger range. And so that is kind of just what I'm looking at doing on smaller time frames. We had our range from last week. We have our range from this week. Now that we are breaking down, we can kind of combine them into one bigger range and look at that. And also in terms of like pattern trading goes, you know, this could be left shoulder, head, drop down, grab the lows. We would look to come up now that we're changing market structure bearishly. If you take out those lows, that's an official change in bearish market structure on the daily. After seeing market structure shift bearishly, you could be looking for a lower high to come in on the charts, generally at the golden pocket, for a lower low then to come in. And what would that create? Your classic head-in reversals, which is a topping reversal pattern. That's what a lot of people don't look at when they trade patterns. You want to look for head and shoulders at the top of major moves. So it's a topping reversal pattern, or if you want to be more technical and more smart money advanced, you'd call that a Model 2 Wyckoff. Tap 1, tap 2, tap 3, your Model 2 Wyckoff, distribution down. So, yes, I do understand what you're saying, though, Darren Does Things. That's very, yeah, you're doing it right for sure. Oop. Okay, and let's see, well, yep, okay, bless. I'm sorry, Darren Does Things. I'm checking the chat now, so I'm sorry. I didn't check it too much, though. Spot CBD. Yes, I am not referencing spot. That is just regular CBD there. We can look at spot CBD. What Discord am I using? It's Jason Casper's. Said face is going to melt at 200. Yeah. Someone said someone's going to, yeah. Give your technical analysis on BTC. Would you advise getting out of altcoin spot holding, specifically CRV? Heavy bags, well done. We can look at CRV in just a second here. So spot CBD is kind of more locally dropping. Let's go on to that 1 hour chart. Yeah, spot CBD has been dropping. You know, from our lows, spot CBD is dropping as well. So our future CBD is dropping and our spot CBD is dropping. But the thing is, with those drops, it is confirming bullish CBD divergence. But in order to see true absorption, we want to see that open interest consistently rising, because you can't absorb the retail without new positions, right? You need new positions to absorb in order to use for fuel to push the price up. So the only concerning thing to me is this, and this is an aggregated open interest. This is on you taking into majority the major exchanges, all of the major exchanges. Okay, given your, yeah, we'll look at curve here. CRV. Okay, so CRV. Okay, so here's the thing on CRV, and I know this chart is a complete mess right now, so you'll have to excuse that. I only look at CRV very irregularly. We had our lower range here, and look at this is a perfect example of an accumulation pattern. Tap 1, tap 2, tap 3, your accumulation zone here, and then you started to see expansion up. You could call that an inverse head and shoulders if you're a pattern trader. Doesn't matter what you call it, it's the same thing. Generally, you're just, using different terminology. So now we have pushed up out of that volume profile or out of this range here, this accumulation range, and we are breaking up, and we're breaking up to our golden pocket where we are seeing a bit of a rejection at the golden pocket here. Now, if this was me holding curve and I bought it somewhere in this accumulation range, I would have at least taken some profit when I hit here and started rejecting. At least some. Let's go ahead and I'm just going to clean this chart up here. So first off, let me zoom on to the 4-hour chart. We were in this channel. Now, it looks like we did bounce from our golden pocket support that we wanted to see a bounce from. So I can take that off the chart. That was golden pocket daily in there. I'm just going to get rid of some of these things here. Naked daily point of control was hit. This daily, I'll check that. And this channel, you can see this channel is breaking down. So we were trending within this channel. Had a deviation into our golden pocket, rejected to the bottom of the channel, saw a deviation at the bottom, pushed back up to the top of the channel again, rejected the top of the channel, fake out above the golden pocket, chopped around in between the midline and the bottom, and then we are losing we're losing that channel now with, looks like, let's look at our volume here. Okay, not too bad. A little bit of increase in volume to the downside on this, but I would expect it's probably, we're just crossing into the red here on Market Cipher B, and NAMI is in the red, so I would expect that we are probably going to drop a bit more. These lows look good, and actually let's do a Fibonacci pull from those lows to the highs. Okay, we broke the golden pocket. Did we broke? We're at the 786 now. You can see the 786 already tried to bounce us, and we're not really seeing much of a bounce from it. So let's check. Did we hit the 886? Have not hit the 886 yet. If we come down and hit this 886, we have a higher probability, even if we bounce from there. What the heck? Okay, even if we bounce from here, we have a higher probability to eventually come take these lows. But what I will say with any kind of channel, either an ascending channel or a descending channel, when you're in a trend like this for a long period of time and you start to break that trend to the downside, you will often come grab the liquidity of the second pivot of that channel. Now, in this case, it's going to be this low because we already grabbed the liquidity of this low from this low. So you expect to come down and take out these lows. But sometimes when you have this liquidity trail that's been building in here, you'll sweep the entire channel's liquidity. So coming down to take these lows down here. But let's go ahead and let's just check out a couple things on the chart. We'll zoom out here and we'll check on a couple things here. So monthly, yeah, we got that monthly marked out. Okay, that's a pretty bearish monthly candle there. Look at that big wick to the upside, closing red here, into your golden pocket. Now that golden pocket was pulled from this high to this low here. Let's go on to our weekly. Let's check our weekly. No real weekly levels. We have a weekly that could in a couple days confirm as resistance, but this one's already been tapped. This has been tapped. We have a weekly down below the monthly here, but this, we're still looking at this box down here. Let me just extend this. This box here where we have a monthly, a naked weekly point of control, and a daily at 45 cents. That's going to be your main, that's going to be a really good level. And also it's probably our golden pocket or our 786. Let's do that. Pull. Yeah, 786 is there as well. So that's your real level of support. Like if you come down here, this could be a really good opportunity. 45 cents. But let's go ahead and get rid of this channel now because we're breaking it down. And what I would like to look at, see, to me, this looks kind of overall bearish because this could be an A wave down, a B wave up to your golden pocket, and then you see your C wave. And your C wave is at least going to come take out these lows. So in a very bearish scenario, we could drop all the way to make new lows. This is going to be very hard to count Elliott structure wise. Like this does look like a potential 3-wave corrective move, but all of this in here was kind of an ascending channel. So the chop within here is internal chop, but you have your big push up, your correction, and your push up here. So if that's a 3-wave corrective move, you know, you're 1, 2, 3, 4, 5, your 5-wave impulse down, your 3-wave corrective move up, and then you'd want to see a 5-wave impulse down in your bigger A, B, C. Okay, so if I bought within this area, technically on the daily chart, we still have not broken market structure bearishly on the daily. You know, we need to take out these lows to break market structure bearishly on the daily. But I will say this, I mean, bear divs coming in here, money flow, leaving the asset here, you know, it's not looking the worst. I would look, if this 786 doesn't hold, we're pretty much going to come take out our lows. So I honestly would have taken some profit at this 83 to 80 cent area. You know, that is our golden pocket where you would expect to get rejected. If it's going to be a lower high on the charts, you would expect to get rejected there. You know, pulling your golden pocket from the highs to the lows here. Turn on the golden pocket. It's right now. This golden pocket is non-log golden pocket, right? But we are on the log chart. And if your move up is more than a 100% move up, you should generally be looking at using log scale. You know, this is a 148% move. So you're going to take that golden pocket, you're going to turn it to based off log scale, and that's going to give you your proper golden pocket area, which is a 61%. So all a golden pocket is a 61% retracement of this move down. You know, if we turn it off non-log, let's actually just back up a bit here, and non-log scale, that looks more like 75%. You know, 25% of the price action here, 75% of the price action here. So that's not the proper golden pocket. You can still use it. The market often uses the non-log golden pocket, even on over 100% moves. Ethereum's a good example of that at 3K. But we just did reject from on Ethereum. Log golden pocket finally came up into our purple band, our purple resistance that we've had on the charts for months now, you know, and you're starting to see that rejection there. Okay, yeah, so I would say curve, let me go back here. Let's look at this golden pocket. Okay, I do like that level there. So this is a tapped daily. We can get rid of that. This daily order block right here. So look at this order block. You have an order block followed by a big imbalance candle here. So anytime you see an order block followed by an imbalance candle, that order block is going to become important. The daily's obviously at the bottom of that order block. Golden pocket is just below it. And we have, remember when I said you have an ascending channel like this, and when you break that channel down, you will oftentimes sweep all the liquidity that channel built. Well, an SFP into a golden pocket is one of my favorite setups in the world. Grab liquidity into a golden pocket. You're grabbing the liquidity of that entire channel's trail and into a golden pocket. Boom. You know, so 57 cents, 55 cents could be a nice good level to look for a push up if we're going to start really dumping on this thing, which it does look like we're starting to. But yeah, I would say I can't tell you what to do. I can't tell you what to do with your trades depending on where you bought. Like if you bought in here, you know, maybe TP some and then leave some to run just in case you make a higher low. If you TP right now and we come down here, just add it back in if we start to bounce here. If we have bullish confirmations and we're starting to bounce, you know, you bought in here, TP here, re-add here, take profit here, you know, up here somewhere. Okay, he posts on consistently. Yeah, I post in Jason's Discord, but occasionally, but I don't have my own channel. Going back to Pleb World, I'll check back early. Yeah. Keston, I get that, man. Bear market is where the money is made. Absolutely, bear market is where the money's made. It's also where you can learn and develop your skills. Theodos, thank you, man. That's a really nice comment. I appreciate that. And Brian, also you. Appreciate you as always, Divine Hood. Also, I'll just write it again. Yes. Yep. Okay, cool. Well, here's the thing. So non-log is still a valid golden pocket to look at. You know, your non-log one is up here. But here's the thing. When a log scale is correcting for high volatility and price movements, right? So anytime you see more than a 100% move, like if I turn this off a log scale, you know, it's really hard when you start to look at like this squeeze together price action and you get this giant impulse up. It's really hard to do proper analysis. So what the log chart does is it just corrects for that and makes, you know, makes it more proportional. And trust me, the log scale works. That's why it's a thing. It really does, especially on higher time frame, more volatile stuff. And if you do see a dump of generally more than 30%, you want to be using log scale. So like on this dump here, it's probably what, 70, 80%, 60% here. Yeah, 75% dump. You're going to want to use a log scale for that. And then, you know, this is more than 100% pump. So 100% on the pumps, it's good to use the log scale fibs, and a 30% on dumps, it's good to use log scale. Now, that doesn't mean that it won't just react to the normal one as well. Like Ethereum, you know, Ethereum, let me go on to this chart here. Actually, no, we'll keep here. Like this is the non-log scale golden pocket for Ethereum, right? If we pull it from our highs, our cycle highs to our cycle lows, it's coming in right at the top of the pitchfork, which I do think this could be a major rejection area, because we're looking at this as a double 1-2. 1-2, 1-2, 3, 4, 5. We just made our first 5. Now we need one more 4 and one more 5 coming up into that golden pocket, top of the pitchfork, ending your big double 1-2 impulse, and then you could see your bigger 3-wave corrective move down, maybe down to 1700. We'll see, you know. But so this golden pocket is non-log scale. But if we take that same golden pocket and we turn it on based off log scale, where did we just reject from? Golden pocket. You know, that golden pocket was also in confluence with the weekly. It was also in confluence with our pitchfork band. Yeah. So you can see the 618, rejection, rejection, one more high. We still haven't even quite hit the 0.65, but this is the log golden pocket here. And look at where your log golden pocket is coming in. Prior range value area low of this upper range that we were seeing. Broke that down. So anytime you have a major range like that, that was considered the fair value for over a year, you know, what was this from January of 2024 all the way to February of 20. So for about a year, that was considered our fair value for Ethereum. We broke it to the downside with impulsive price action. So now that this used to be considered fair value, but it's no longer considered fair value, on a pump, you will pump back up to it to bearishly backtest. What used to be considered undervalued now might be considered, what used to be support is now maybe considered resistance, where you then drop again. So, and you just happen to have a fresh weekly level there, and your log golden pocket there, and your pitchfork band there. Just a lot of different things, yeah. So, I mean, I had this purple box on my chart for a long time, and we've been looking for that push up into that box for a bigger, you know, push to the downside. Now, I would say overall, Ethereum is still looking pretty bullish here, guys. Ethereum is still looking pretty bullish, and I do expect one more high. Naked weekly point of control, pitchfork top, point of control of our range is close by, of our prior range. A lot of stuff here, so. Hey, dude, that Samuel S., that sounds like a good life, dude. Trade, lifting. I lift, 5 days a week. Play pro ice hockey. Wow, pro ice hockey. That's awesome, man. Skating is so hard to me. You know, I just suck at it. Last time I was on the rink, I actually broke a skate. Snapped off right in front of me. Right on top, underneath me, I should say. Okay, guys, let's go to the total market cap here. Now, I want to talk about the total market cap because we have been in this pitchfork. This is pulled on our weekly. Let's go on to our weekly chart for a second. We have been in an impulse, a very clean 5-wave impulse. 1, 2, 3, 4, 5. We ended our 5-wave impulse. Now, after a 5-wave impulse finishes, you're looking for a bigger 3-wave correction down. And then maybe a potential another impulse, right? Now, that correction can be a shallow, flat correction, or it can be a deeper correction that goes all the way down to the golden pocket. I hope not there, because then Bitcoin might actually go to 32K. But on the total market cap, if we're looking at our wave 3 impulse lows to our wave 3 highs down to our wave 4 lows, and we're looking at where our wave 5 can end. Now, I've done this. I kind of developed this strategy myself using Elliott waves with pitchforks. But you can see here, where did our wave 5 end at the top of the pitchfork? And we rejected the top of the pitchfork, chopped around in the band for a bit, finally lost the band, came down to the midline, saw a bounce, ranged for a bit, lost it, back tested it, came down to the lower band, bounced from the lower band, lost it. We didn't quite make it to the bottom, which was concerning for me. But then we reclaimed the band, back tested it as support, right? Like, let me zoom in here so you guys can see this better. Reclaim the band, back tested as support, push up, small range, push up through with a volume candle through our midline. And so far, our midline is holding as support. So as long as we don't lose this midline, Bitcoin could continue to range or continue to push up, but and the altcoins, because it's the total market cap. But you can see here, we have our volume profile pulled. Let's just zoom in onto the 4-hour chart. So this is this upper range that we're looking at here. And yes, you could pull it as two different ranges, this being one range and this being another range, kind of. I mean, on this one, I wouldn't even say, because we've dropped so far, I would say it's just one range. That's just one big range there. So we have our one big range here. And if we start to lose the value area low, you can see the value area low of this range is pretty much right at the pitchfork midline. And if we start to lose that, and not, like, we could see a small deviation where we just SFP the lows real quick and then get right back in, that would be just a liquidity grab and a deviation. But if we start to dump and not grab liquidity, dump a bit more back test, I mean, this thing could drop, you know, golden pocket here it's going to be a pretty devastating move, but golden pocket is all the way down at the lower band, and that could be a big move. And you know, we would be coming down to take out the liquidity of this range. And it's after a bigger impulse, 1, 2, 3, 4, 5, and this could be, you know, an extended fifth here. After your impulse, you're looking to see a bigger 3-wave correction. This could be just a small flat correction and then continuation, but after an impulse finishes, you're looking for a correction. So if we start to lose this midline, you know, it's unfortunate, but we could see a bigger drop. Okay. Yep. Okay, guys. So now it's getting a bit late here. I do got to go in about 10 minutes. If there's anything you guys want me to look at, let me know. I can cover Solana real quickly. Solana is losing its range, and we are coming into our golden pocket. Now, that golden pocket is pulled from our last range lows up to our highs. You can see we're dropping, hitting into our golden pocket, but we're not really seeing the bounce we want to see. Money flow is just crossing into the red. It looks kind of bearish here, and we're not seeing a clean SFP of the range lows. So to me, Solana does look a bit more bearish here, and actually this looks like it could be the start of a, let me just get rid of this stuff now, of an impulse down, right? Like we finished our big daily impulse up from the lows. And in this, it's a shame we didn't make it up to 193, which is where the value area high is. So this range goes back all the way to March of 2024. To our March 2024 highs, you can see that Solana's kind of been chopping within the fair value over the past year in this upper range here. And in the last few months, we worked our way through the range. We saw a deviation of the range down here, but it's the second we were able to get back within the range. I actually longed $123 right here on the bullish back test. So you break back within the range, you back test the value area low, confirmed to support, you look to push up to the point of control. And I did take profit at the point of control, but what ended up happening is we just broke above the point of control, flipped that point of control to support. So you would expect to generally overall work your way up to the value area high, where we also have our log golden pocket. We also have the previous range value area low. That's this upper range up here, the value area low of that range. We have a bunch of confluence up in that area, a daily level, value area high, naked weekly point of control. But what happened is we just were ranging over the past couple weeks in this range, and now we're starting to break this range down. But unfortunately, the breakdown does look a bit impulsive. This looks like a 1-wave, 3-wave corrective move in a wave 2, and this looks like a 3, and your 3 could bring you all the way down to the 1.618, where then you would bounce, look for a lower high to come in, and then in a wave 5, come down, and this support level now is going to be really good, because this support level is our point of control of that macro range, but we also have a weekly in there. We have an 886 tap in there, which I believe is going to be changed now. The anchored VWAP from the lows, the trend, the anchored VWAP support's going to be in there. We have a bunch, 2 naked daily points of control in there. So between 146 and 143, 143.5-ish, could be a great swing long level for Solana. But I do have to warn, if this is a 5-wave impulse down, being a 1, 2, 3, 4, 5, not that was too far, but 1, 2, 3, 4, 5. We could just see a 3-wave corrective move up to the golden pocket, and then we could see another 5-wave move down to the value area low. So that is something we need to be aware of. And that's only if Bitcoin probably has its bigger correction down to 88. We can expect Solana to correct down to like 123. But Solana's not looking the best here. And I actually am short on Solana and looking to take some profit at 150, but really ultimately at like 145 to 144-ish. Okay. What's up, Mickey? How you doing, man? Thank you for joining. Okay, so yeah, Solana not looking too hot here. We are hitting a golden pocket. If we do that golden pocket pull from our prior range lows up to our highs at that golden pocket, seeing a bit of a bounce from the golden pocket, but not like we want to see. Money flows just crossing into the red. So what I suspected, and I was just covering this on the VC stream in the Discord. I just finished streaming there. But if we look at this last push down and we take a golden pocket from the rejection of the value area high of this range, right? We rejected the value area high once, twice, and now we're losing value area low. And then we go to the lows. You can see that our golden pocket, let me make sure that's not on long. Yeah. Golden pocket is coming in around the point of control of that range. Now, if we drop to the 1.618, it would be even better. So in your 1.618, your golden pocket would be right around the bearish backtest of the range value area low. Okay. Cup and handle and gonna take time to reach 140K, few months, 3, 4, 5 months. Yeah, you're right, man. We still can't have that bigger super cycle where it doesn't necessarily follow the 4-year chart. But I do think the fact that we're closing back within our volume profile is bearish. There's no other way to look about it. We had this big range. We deviated the range. We deviated the all-time high. We tried to break out and find new levels of price discovery. We saw a failed auction of that at our resistance, and now we're breaking back inside this range. So if we start to close a couple daily candles back within this range, there's a probability of rotating down to major support levels, being 97K, 88K, 92K is a good level. But yeah, we could just rotate down to 88K and then push right back up. And to me, that's not even that bearish because you're still just ranging in your range. You broke the highs of your range. You made new highs. Now you're just doing a normal retrace to the golden pocket, higher low, now higher high, to 140. And that actually makes sense, Mickey, because as far as this pitchfork goes, look at rejected the top of the pitchfork, came down to the lower band. If we do come down to 88K, by the time we get down there, this band could be in alignment with it. It could take us a while, like a bounce here, come up, come here, bounce here, come here, 88K, right? 88K, the band again, which would be your golden pocket. And then you're going to push up from here, reclaim midline, chop in the band probably for a bit like we do, push up to 140 to 145K by that time. Top of the pitchfork, once again, 145 is kind of a major level for me. Yeah, low 90s is a good area to be looking. I think the anchored VWAP, yeah, anchored VWAP right now is around 93. That's our anchored VWAP from our prior all-time high. But I do like, so there's a couple anchored VWAPs that I'm watching on this chart. I like this anchored VWAP from 49K still. Like, look at it's in alignment there. But also, if we take an anchored VWAP from the 74K lows, you can see that anchored VWAP is coming in right at that point of control of the range. And that's also our pitchfork midline. So midline will rise a little bit by the time we grind down there. It's going to be in confluence. So grind down, midline, point of control, anchored VWAP. That could be the area. Yep. Yeah, 145 is going to be a major level, man. Okay, guys, I have got to go ahead and take off here. Thank you all so much for joining. If you did get anything out of the video, please hit the like button. It just helps the channel grow. Also, I do have a couple sponsors of the channel. BYDFI is one of the sponsors I have. It's a no VPN and no KYC exchange. They are offering 15% cash back on your initial deposit, free money to trade with. That's up to $1,000 cash back. They're also offering $8,100 in futures trading bonuses, depending on how much volume you move. They do have a competition going right now where you can win some prizes, and you do get 17% off your trading fees with the affiliate link that you can use with me, but you can get actually up to 45% off trading fees based on how much you deposit. So really good exchange. The second partner of the channel is MEXC. They are offering 10% cash back on your initial deposit and up to $20,000 in future trading bonuses. And then lastly, I do have not only Jason Casper's VIP Discord, link in the descriptions if you want to join that and trade with me throughout the day. But NAMI down here, this is a new oscillator that I've been using. Gives very, very good signals and helps you enter and exit trades. Just until tomorrow, so until the end of the month, they're running a 65% off special on this thing. It's the biggest special he's ever given. After the end of the month, it will go back. I'll still have a 50% off discount code, but if you're interested in NAMI, like right now is the time to do it. So thank you all so much. R Pink, thank you so much. Thank you for being a moderator. I will see you guys next week, you know, whenever I stream again or when I make a new video. I'll try to keep you guys updated as best as possible. This next week is going to be another very, very important week for Bitcoin. So pay attention, trade safe, use stop